All right. So, Jerry Robinson, pleasure to meet you. Looking forward to having a conversation. Interesting action today for us to be getting together to follow the money.
Yeah, great to be here, Dale.
Yeah.
I assume you can hear me okay?
Yeah, got it, Jerry. And if you want to share your screen, I don't know if you've been in Zoom before, but at the bottom of the black box, you'll see a green share screen
Oh
button.
yeah, sure.
You
Yeah,
want to show it.
let me do that.
And I appreciate you being here. Marking your calendar because I know it was made a bit ago, our the schedule.
Oh
So,
yeah,
so
no
Jerry,
worries.
what I like to do before we get into, oh, you even have a nice little PowerPoint, is talk about a little about your journey and, maybe take us back to point A, what were you doing before you got into the trading industry and how did you cut your teeth in it? What was your first position in
Wow,
the in the trading business?
that's really neat. Well, just kind of personal. Whenever I was growing up, my mother was a stockbroker, and she
Oh,
actually became a stockbroker whenever I was in middle school, and so she was home practicing for the Series 7 a lot, and it's a pretty tough test. Anybody's taking the Series 7, and
yeah.
she was new to the field, so she was having to cut her teeth in that stuff, and I was helping her learn. I was helping her study, and so I began early on to kind of understand some of these concepts. And later on, when I got my first real corporate job, I was itching to remain with Wall Street. I was itching to focus on stocks, and I had a friend there who was a part-time trader, and he didn't really know what he was doing, but he was making a little bit of money. This was the dot-com era,
Okay.
1996, 1997, right before the big, the
Right. A
big
lot.
bubble.
Everyone was a genius back then,
Oh yeah,
right?
yeah, yeah.
Huh?
Exactly, Dale.
It's
So
kind of
so
like going into 2022.
everybody was smart and exactly. Everybody was
Yeah.
smart in the casino, right? And so
Yeah.
but yeah, here here it was in the late 90s, and I was learning from this corporate friend of mine, how to trade, and not learning very well. Again, he didn't have too many rules, but I began trading, and that was really the beginning. So I traded my first stock in 1996. I traded my first option in 2002, and then I bought my first cryptocurrency in 2012. And so that's kind of
Okay.
my that's kind of my journey, my foray into the market, and I'm still trading today. I teach people how to trade. I teach people how to invest, and they're two very different things, Dale, as you well know. They're not the
Yes.
same.
Yeah.
Many people
Yeah.
get
It's all
confused.
about time frames on that, Jerry. Right.
Oh, so true, so true.
All right. So you were an early adopter. I'd call it 10 years ago in crypto.
Yeah,
Uh,
I was fortunate, very, very
yeah.
fortunate to be introduced by a very early adopter by the name of Trace Mayer, who just in a similar situation like this, he was a guest on my show in 2011, and he was saying, "Have you heard of this thing called Bitcoin?" Yeah. And I said,
Yeah.
"No." So pretty neat.
Yeah. And so I'm going to try and be quiet and interject. So why don't you take us through what you brought us today?
Well, I wasn't
And
exactly
you
sure.
were very fortunate, your journey can again, uh, to have your mom, and then, were there any books or trading style that, was a big influence for you
Oh,
that,
sure. Yeah, I was greatly influenced by uh, two individuals. One, especially William J. O'Neill, and I highly
oh,
recommend his book,
sure, relative
How to Make Money
strength,
in Stocks.
right,
Everybody's heard of O'Neill, or they've heard of Investors Business Daily.
right,
I don't really take Investors Business Daily today, but I do really appreciate his book and his style, his can slim approach. I think it's great.
yeah, yeah,
And then this is kind of an interesting one that's kind of gimmicky almost, but I ran into Nicholas Darvis's book early
oh,
on,
yeah,
How I Made $2 Million in the Stock Market. Total gimmicky title, and I expected it to be pretty
yeah,
gimmicky, but when you read through it, it's very, very valuable. He warns you about a lot of the things that you can go off on the trail and end up losing your money. He
yeah.
really teaches the importance of price action, volume, things like that. So it's a
The
great
Darvis
read.
box, yeah,
The Darvis box. Yeah, it's a
yeah,
wonderful read, and it's a nice encouraging read, I think, for those who are new to see that they really can learn if they can get through the forbidden forest of all of the pitfalls, that
okay,
await a
Jerry.
trader.
All right, so tell us your story now and what you do at Follow the Money.
Right. So followthemoney.com is where we educate, equip, and empower people to break free financially. So this has been a journey of mine and my wife's now for over a decade. Um, I wrote a book back in 2008, and it became a bestseller called Bankruptcy of Our Nation. It was right around the time of the economic collapse. And in that book, what I was doing was is I was explaining what was behind some of the problems with the 2008 crash, but more specifically, how people could rewire their financial lives to to be better equipped for more problems ahead, because we didn't think that the Fed boom bust cycle was going to end anytime soon, and sure enough, we're living through more of it. And so how you do that is, of course, you have a very holistic process. And so we teach that for free at our website. We have a podcast, followthemoney.com. You can sign up for our free email list. We have lots of free stuff there. But we also have a membership, and the membership is for people who say, look, I'm a trader, but I want to be a better trader. I'm an investor, but I want to be a better investor. And what we do is we provide resources, tools, courses, and all of those things. And we have just gobs and gobs of them. So it doesn't really matter if you're into cryptos or options or stocks. We've got courses that we've created, to help you kind of navigate that. So that's what Follow the Money is. We, again, for those who are listening and to say, hey, I'd like to learn more, just go to followthemoney.com and just listen to our latest podcast, or, sign up for our free email list, and you can get more info.
All right. So let me ask you, since the market has become more two-sided, and there's been a lot of fear on the street, although not reflected in the VIX, you have any market views you want to share with us today? Besides what
Sure.
maybe you
Sure.
could show us your setup, what kind of charts you use, and
You
how
know,
you
yeah,
go ahead.
what I just did here, Dale, was I just threw up something. I wasn't exactly sure what to share
Okay.
today because I wasn't
All
sure
right.
where you wanted to go, but I just put up our latest issue of the Robinson Report. So this is a journal that goes out every weekend
Okay.
to all of our members, and I just thought I would share
Okay.
this. I'll
Sure.
just scroll down to some of the noteworthy things here. Let me scroll down to say our market trends. This might be a really good page right here, just to briefly discuss what we see.
Okay.
So we track the markets with three different time frames: the swing, which is the daily; the position, which is the weekly; and the long term, which is the monthly. It's hard to make monthly calls before you have the entire monthly data, until you have the entire monthly candle. The S&P looks like it's getting ready to form a brand new long-term downtrend. Now, what's interesting about that is that we've been measuring this now for quite a while. For the last decade, almost every time the S&P 500 forms a new long-term downtrend in our system, we get a pivot from the Fed. Now, this is how the Fed has been reacting up until this time. The Fed constantly talks about how it's interested in economics and unemployment and all of these other unrelated figures that are not related to those. But in reality, it almost seems like they're looking at a chart of the S&P 500 and reacting based upon that.
Peter Bookvar says the Fed is not data dependent; they're S&P dependent.
Right. I think that's a bumper sticker. That's a perfect way to put it.
Yeah.
So the Dow
You
just
could
went
steal
through.
it.
What's that?
You could use it.
Yeah, right. Exactly.
Just
Yeah.
give Peter credit. By Peter.
That's a great one. I'm so glad you said it. I'll have to
All right. All right.
keep that handy.
You'll have to
Now
use it.
the Dow Jones is down for like 8 weeks in a row. You have to go back to the Great Depression to find this kind of sell off. And this is intense, but this was a liquidity bubble, Dale. They just pumped too much money in. So all the money's just slowly easing back. Not all of it, but much of it's easing back out. And so it's not really surprising to see this. The only two markets that are green, green, green across the board, and that have been working for our members all year, has been the dollar and oil, right? They've been working great. So when we
today is an interesting day in the dollar. So what would it take to flip your green arrow, at least short term, from up to sideways to down?
So on the dollar right now, if we just look, in fact, I have a chart of the dollar we'll just go to. It's down here. We'll get right to it. So
Good
we can see that.
stuff.
Yeah, we've had a really nice rally in the dollar that we saw coming with the 200-day moving average breakout early in 2021. It kind of hesitated, stumbled, but then it finally really broke out in September of 2001, and that's where we really began to see it begin to get some motion. And by the end of the year, of course, it was off to the racetracks.
Way before the war.
Right. Now, we touched 105. We haven't been there in about 20 years. So it's been quite a while. I mean, even that 2014 rally, or was it the 2016 rally? I forget the rally in the dollar, the last really good rally we had, the juicy one besides the 2020.
COVID. Yeah.
Well, but yeah, before COVID.
Oh, yeah. 2017, 18, we were up there.
Yeah.
During the taper tantrum.
Right. But even during that time, we just didn't get that same kind of blistering rally that we've got here. So we got all the way up to 105 and we pulled back. Now, why are we pulling back? First of all, we probably are about to go red on that very first daily.
Okay.
Based upon what we're seeing here. It all depends on what happens today. But today it looks like the dollar's down another almost 1% as I'm reading this. So that's why is the dollar go straight up and then come down like it's doing right now? Well, we believe that it has to do with of course, the interest rate expectations drove the dollar up, but then now the market is realizing that the recession and fears of a recession look much more clear. In fact, the SEC chief is saying a recession is, coming or we're already in it. And so people are beginning to sense, oh no, we're in a recession. And so what does the Fed do in a recession? Does it keep raising interest rates in a ham-handed way? No. It has to ease off a little bit. So if we are entering a recession, and I'm not making a declaration that we are, but if we do enter a recession, then the Fed is going to have to be sensitive to that. And that's why the dollar's pulling back. That's why gold is perking up. That's why interest rate yields are pulling back, because this is just a moment where we got to stay, if there's a recession, the Fed might pivot earlier than we expected.
And a pivot doesn't necessarily mean reversing. It could just mean a pause.
Correct. And that would be enough to take some of the pressure, off of some of these stocks. Dale, it's, having done this, I've been trading now for 25 years. It's hard to believe. And I don't know how long you've been in the business or how long you've been doing it, but
I can't remember.
Yeah. Okay. Well, that's a good sign that you've been doing it for a while. So, but I don't know about you, Dale, but I've seen a lot of things. This whole thing has just been a circus. I mean, it really has been wild. And seeing all of the new traders come in 2020, 2021 was almost like you wanted to step in as a parent and say, slow down, stop, be careful, because this is a trap. I mean, of course, the liquidity bubble was going to send prices up, but then, boy, we've had some vicious downturns in some high quality companies.
And losing 25% overnight,
right?
And all the big gap downs that I think started with Netflix,
right? And then Facebook, and then
Amazon, they all did.
Walmart and Target.
Yeah, I mean, do you think it could be because it's all the market structure? When you started, there were still human beings involved in the process, specialists, market makers, and now the market structure is less stable.
Yes, I would say Robinhood has contributed to that somewhat. And I don't want to blame the retail investor entirely, because it's clearly there were problems before he showed up in any kind of meaningful way.
Well, I mean, the specialists were a bit of a circuit breaker. They had to provide bids.
Correct.
That was part of their, that was part of their mission, was to provide liquidity. And, when the machines do, there you go. So,
Walmart here, for example, I mean, this is a high quality company. If you look at companies just on a revenue basis and say, which company out of all the companies in the world, Dale, takes in more money into the register every single year, it's Walmart. Nobody has more revenues than Walmart. There's just no company on earth that has more. In fact, the only institution that even rivals Walmart would be something like the Pentagon, which receives an income of around $800 billion, every year. So,
wow, that's
so, so,
interesting.
so, so
Walmart and the
Walmart's,
Pentagon. I never heard that
yeah,
analogy. That's pretty good. Yeah.
yeah, Walmart's taken in 500 billion plus into its registers. It doesn't keep all that, of course, but it takes a lot in. And so a lot of people depend upon this massive company. And to see this worst day in 35 years, we've been through a lot the last 35 years, Dale. And so,
Yeah.
so for this to happen now kind of speaks. And then if you look at, say, Target, for example, it followed the same narrative.
Yeah.
One that I'm excited about, though, is Costco. Costco has also fallen from about 600 down to about 420 as of this print.
Yeah.
And, that's Costco is a very well-run company. It's one of my favorites. So I am looking to pick up shares of this one once, the bleeding comes to an end.
Fill the gap at 480.
It's probably going to have to, but I may buy it not as a trader, but as a longer term investor. I might just have to get some of this, for a longer term, especially if it keeps going down. I'm very, very attracted to Costco.
Climax selling with that volume bar.
Right. Yeah.
Okay.
And then we have gold, which is perked up above the 200-day moving average on Friday, on Thursday, Friday. I suspect that it's continuing higher today. I haven't looked at
just another 20 higher.
Yeah, there it is. I see it. Okay. We're still below the highs on gold. Silver also just really beat down. Really, it has to clear the 2250 level before we're going to get anywhere. Also on silver, anybody who trades it, I would encourage you to use a 30-day moving average. It's really interesting going back on the daily for months and months and months and months. So watch out for that quickly declining.
A little over 2320.
You're right. Yeah, but 2325, yeah, would be that 30. That's a fast moving, declining 30-day.
And that's not too far away from the 200 either. They kind of converge there.
They
silver still had gold acting better, gold silver ratio. We'll see if that changes. You follow the gold silver ratio for preferred longs and shorts and metals?
I do. I think it's currently in the 80s right now. I haven't looked at it in the last few days, but I think it's around the 80s. So it's pretty high. It's relatively
peaked around
high.
89 last week. Yeah,
right.
Mid 80s. So a lot of people, if you've been trading for a while, you probably remember 40 to 1.
Right.
In the gold
silver exactly.
ratio, right?
Exactly. Okay. And then you may remember like 100 to 1, way back,
Yeah.
The euro and the dollar have also been verging on parity because the euro for a long time was, much more valuable, in terms versus the dollar, but it's certainly come down. So we're seeing some potential parity there. There's the 10-year yield. We actually use a 250-day moving average on the daily. This is a 50 on the weekly. But 250-day on the 10-year yield's a really interesting moving average. We like to look for those moving averages that really just make sense from a longer term. And here you can clearly see the great support at the 250. Again, it says 50, but it's on a weekly. And so we're seeing that pullback, that nice pullback in the yields, which I think everybody appreciates after this breathless rally we've had. I don't suspect this will remain that way, but as long as those recession fears, and also to a lesser extent, I think there's another health situation, another health scare globally that's going on, and so that's
the monkeypox.
Correct, and I think that also may be playing some role in people saying, "Are we going to have to reset expectations?" Who knows what the guys in the back room are doing or how they're calculating, but they have to price all this stuff in. And at some point, Dale, they'll actually begin to price in the recovery, and they're not doing that now, but they will. And when they begin to price in the recovery, that's when you'll start seeing the markets go up. And we would expect that maybe sooner rather than later. Markets bottom before people realize it, and they top before people realize it. So we would expect. We don't expect the bottom to be instantaneous or very quick. It could be a while, but we just suspect that it will begin to, bottom and begin to rise before people really get the memo, the way it usually does.
Okay. So the oil, you're mainly focused on DBO is your preferred ETF on it?
Yeah, DBO is one that we use. We actually have an ETF. For those who like ETFs, let me come down here to our ETF leaderboard. So this is a service that we do that ranks all the
Okay.
ETFs. These are exchange traded funds
Right.
by relative strength for position traders and also trend speed. And what we're doing here is we see that PSQ, which is the short QQQ ETF, is the number one. Corn and the dollar are number 2 and 3. So for those who are looking for momentum plays, or things that are really working in this environment, there's always a bull market somewhere. So here they are, PSQ, corn, UUP, then you have the commodity ETF, and then
Yeah.
nothing but oil here. Oil,
Yeah.
USO,
Look at that.
XLE. I like
Oil.
IXC. That's a good one.
Okay. Interesting. And beans.
And
Yeah. I mean,
soybeans.
I mean, higher interest rates were never going to break the agricultural commodity market,
Hmm.
right? Can you break something that grows and
All
that
right.
always have constant demand? You could break things like maybe real estate or lumber or copper, economically sensitive commodities, but agricultural commodities, I don't know.
Yeah. Good point. Good point. Yeah. Right now, for example, our ETF leaders, what we do is we take these three that are at the top every week, and then we put them into a basket like it's an actual portfolio, an ongoing portfolio. When we measure them against the S&P, and so far our ETF leaders are only down 2.49% versus the S&P. So we feel like we're meeting the mark. We would rather be positive, but at least we're not down there in the doldrums where
Yeah.
the S&P is. And then also sectors. We like to measure sectors for our members. A lot of our members like to do sector rotation strategies. And if you like to do that from a long-term perspective, right now, energy, utilities, and healthcare. Healthcare is showing some nice leadership recently. We had consumer staples as the number 3 for Q2 for sector rotation. And that's been that way for a while, but that hammering of Target, that hammering of Walmart, that hammering of Costco, these consumer staple stocks are just getting hammered. So it's caused healthcare to rise in the ranks. We're also seeing some strength there. Biotechs have been kind of lost in a
Yeah.
lost decade, if you will. I think there's some opportunity there. Many of those stocks are trading below their
Book.
literal, yeah, their book. I mean, yeah, a lot of these companies have a lot of cash on hand, literally, and their shares are trading for less than the cash they have on hand. I mean, so many of these have just been, I think, Dale, I would sum it up, all that up this way, is just to say that you know this probably as well as anybody, that the biggest money that can be made in the entire market are in bear markets, where people get real fearful and they start throwing everything out. And if you're patient, and if you can kind of sort through the stuff, and if you know what you're doing, it's a wonderful time for us. So it can be depressing to see your portfolio go down, but it can also be exciting, to find new opportunities for the long term. And I think that's really the gift that we all have right here. We've been through a lot the last few years, but people will reset their expectations, and we will have another recovery the way we always do, and that'll begin to be priced in, and there'll be a lot of opportunities ahead, whether you're a
Yeah.
trader or an investor.
Yeah. I know some smart people that still believe there'll be a melt up
Mm-hmm.
before
Mm-hmm.
there's a bust.
Sure.
So, I've just learned anything and everything is always possible,
Yes. Yes.
right? I
The
mean, it's a ongoing process of reassessing the new information that we get.
That's it. It's constant. The market is a voting machine, and it's
Yeah.
always constantly processing all the new stuff. If you look at the S&P 500, again, speaking of that opportunity, we're down here where we haven't been in a while. 26% of the stocks that are in the S&P are trading above their 200-day moving average. So that's been a while. So typically, if you start going long, anytime we're below 45%, and you have a long-term perspective, you're usually buying right. If you, again, long-term perspective, we're down here 26. If we're fortunate enough to get down here to where there's less than 10% of the stocks and
Yeah.
the S&P trading above the 200-day, that's just going to be a screaming buy signal.
Yeah.
Even if there's still a lot of fear around, it'll just represent a major, you know, move away from the mean, if you will.
Okay. And yeah, I tell you what, Jerry, some Do you sleep?
We've got a great team. I'll put it that way.
All right.
We have
Yeah.
a
You
great
need
team.
a team definitely to do all this research and put it all together. And where are you from, Jerry?
I live, actually, we were just speaking about Walmart. I live just about, 30 minutes from their headquarters. I live in Northwest Arkansas, down
Okay.
near Fayetteville, Arkansas. Beautiful area, lots of mountains, gorgeous, great people.
Raised there too?
Yeah, raised in St. Louis, went to
Oh,
school in
okay.
Tulsa, and then came to Northwest Arkansas, and that's where we started. We came here to buy real estate and to
Yeah.
invest in this area. It's a lovely area.
Yeah. Well, you have anyone ever tell you have a great voice for media, like
I've heard,
radio or TV? You sound like an anchor.
well, thank you very much. I appreciate. I've heard that I have a good face for radio, but I've never heard about the
Yeah,
voice.
they do that to all of us, don't they? All of us. They're always saying,
No,
"Oh,
no, no.
Dale, yeah, yeah, yeah." But
Thank you
really,
for that.
great
That's kind.
demeanor. And I'm glad that I reached out on Twitter to talk to you, Jerry. And you have a great feel for what's going on and a lot of comprehensive information. And best way for people to follow you is on Twitter at FTM Daily.
Yeah, that's a great thing to do. Yeah, just follow us on Twitter at FTM Daily. And again, if people want to find our website, they can just go to followthemoney.com and just shoot us a note if you want to talk. We'd be happy to chat with anybody.
And at the minimum, follow Jerry at FTM Daily. And really glad that we made this connection. Jerry, I'd love to have you back sometime down the road.
Likewise, Dale. I appreciate the invite and I really enjoyed it.
And and now you're also my trading warrior brother. You made it through a Pinkert interview.
I'm proud.
Really, anyone who's been doing it for a few decades and has seen a few things and different cycles, as long as you have and still have the passion for the business, I salute you. So,
well, thank you.
I'm now rooting for you and all the people your words and writings touch. Okay, Jerry?
Well, thank you. Thank you, Dale. I really appreciate you and appreciate your work.
Thank you, buddy. So that's it. Follow Jerry and check him out. And that you could join the team in about 15, 17 minutes for the morning edge. And don't just count your pips or shares or ETFs, count your blessings, and see everyone tomorrow. Thanks again, Jerry.
Thank you. Take care.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.